Hello, everyone. Welcome to this webinar. This is the TradeStation series, Art of TradeStation. Today, we're going to talk about commitments of traders breaking down futures open interest. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation. It's always a pleasure to join you guys and talk a little bit about the TradeStation platform. So some of you may have a methodology when approaching commitments of traders and may have certain ideas on how to look at the data and how to interpret it. Let me just start by saying that there's no wrong or right here in this presentation. Whatever that you're doing is pretty much it's great, because I'm always in pro of finding different approaches to certain data, and if you find that analyzing the data and interpreting the data in a certain way is working for you, why would you change that, right? So any type of approaches or any methodologies when using commitments of traders is actually something that we welcome. Today, we're going to talk about one specific way of looking at the data. So hopefully you enjoy the presentation. Before we get started, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about in this presentation is for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone, especially when you trade products like options and futures, which carry a higher degree of risk. Past historical performance is no guarantee of future results. In some of our examples, we're going to be taking a look at how strategies worked historically. So make sure that you are aware that that's no guarantee that it'll do the same thing going forward. For anybody that needs a little bit more information on these disclosures, you have a link right here on this PowerPoint slide, www.tradestation.com/important-information. All right, so let's go ahead and get started here. And the first thing we're going to do is talk a little bit about what is it that we're doing at You Can Trade. You know that You Can Trade .com, the website, is an affiliate of TradeStation, and we're doing TradeStation education there. TradeStation is the host of two channels. First, Getting Started with TradeStation, which is open to anyone that wants to join for free. We have weekly classes in there. My colleague, Michael Tibbetts, is the one that's running that channel. And every Wednesday at 11:30, he does a Q&A session. So if there are things on the TradeStation platform that you're still struggling with or that you have questions on, make sure you join him on Wednesdays at 11:30 in the morning, and he does an open Q&A. He talks about anything related to the TradeStation platform. And when you're ready to take your TradeStation knowledge to the next level, we have the TradeStation Masterclass. In here, we dive deeper in platform technology. We do strategy elements session where we highlight certain strategies in TradeStation. We also highlight certain studies like parabolic or Bollinger Bands. We do classes on easy language, and we help you program easy language for custom studies and strategies. Every session is archived, and we meet here every single day, including a couple sessions that are open Q&A sessions for more advanced topics. So if you want to join us, perfect. Check out the content at youcantrade.com, and let me know if you have any questions about the content as well. I believe that everyone here has my email address, and if you don't, it is jnava@tradestation.com. You're welcome to reach out to me for any educational aspects of TradeStation. So let's go ahead and get started. And what is commitments of traders? First of all, the Commodity Futures Trading Commission oversees all the trading activity that happens in futures. There are certain trading levels that are reportable, and these are, of course, established by the CFTC. The CFTC is a federal agency, and anybody that's in the futures market that is trading beyond these levels is required to report their positions to the CFTC. And every week, the CFTC is going to compile all this data and create a report, which is called the Commitments of Traders data. It includes all the open interest across all the contract months for a commodity. So let's take, for example, corn. It'll look at all the different expirations, not only the one that is considered the front month. There's always one that has more volume, more open interest. Commitments of traders data includes not only the front month, but also all the other expirations that are still trading, but that are not as actively traded as the front month. So it compiles all that information and it gives you what is all the open interest, for example, in corn. How many contracts are there for corn? And then remember that a contract involves a buyer and a seller. And of course, that's very useful information for anybody that's trading futures. The report, the Commitments of Traders report, gives you information on 3 different trader categories. They are the commercial traders, large speculators, and small retail speculators. There's a slide here that we talk a little bit more in detail about what each one of these categories are, but it's interesting that the report classifies the trades in 3 different categories, and the person that's meeting the threshold has to report it in a way so that the CFTC knows what category of trader they are. We'll go into explaining what each one of these categories are. The data is supplied by all reporting firms, so FCMs, futures commission merchants, clearing members, foreign brokers, and exchanges. So all these different entities that are connected to futures trading have an obligation to report any trades that are meeting these thresholds, these levels that the CFTC requires a report. And of course, that's where the CFTC commitments of trader reports comes from. The information in the report is compiled specifically each Tuesday at the close of the day and is processed for Wednesday and is released on Friday, which means that Friday evening is when the CFTC releases the data that is or that pertains for that past Tuesday. Yeah, you would say that this is more of a lagging piece of information, but you're going to see how interesting it is to use this information not as a way of triggering real-time signals. The main characteristic of being a lagging piece of data just doesn't fit well with real-time signals. So any trader that's trading futures would probably not use commitments of traders as a real-time trading signal, but as a way of confirming a trend or confirming a trade. So yes, the data is released on Fridays as of, or what the numbers were on Tuesday night. So the first available day on which they would be available to the trader would be on Wednesday. When you look at the data on TradeStation, the commitments of traders data, you're going to see that it's posted or with a date of Wednesdays, because that's the first day that the data would be available. Although it's post-dated, meaning that, yeah, the data continues to be released on Friday, but we always time and date stamp it as if it happened the Wednesday before. So we're going to look at different chart analysis windows inside of TradeStation, and this is going to come very clear, okay? The report, of course, provides transparency and understanding of the market dynamics of futures trading. It's very interesting how the position switches on all these different trader categories from a short net to a long net. We're going to take a look at different examples, but it also provides information about the trend and the strength of the commitment traders have towards the trend. So it's also a very interesting way of looking at this. If the markets are trending up and you see a lot of commitment on the long side, it's kind of, you can use that as a confirmation that you are probably in the right track. All right. Who are the players? Let's talk about the different categories. The report makes it very clear what these 3 categories are. So it's important that we understand each one of them. The first one, commercial traders. These are the people that trade on behalf of a business. And we're not talking about a trading business. These are traders that have an interest on the commodity itself. They're hedging their businesses by trading futures market. But what interests these traders most is not really the performance on their futures contract, is the performance on their business, which has to do with the commodity. I'll give you a clear example. Let's say that you are a corn your interest is corn as a business. Let's say that you're Kellogg's, the company Kellogg's, they produce cornflakes. So they're interested in corn because they need corn to produce cornflakes. But as a business strategy, they're going to trade in the futures market to guarantee some price, some sales price. And that's the way that the businesses are going to hedge, against fluctuations in price. But what matters most to them is what their business is doing, is not what the commodity is doing. So you're going to see a lot of times that these commercial traders are probably going to go against the trend. How is that so? Well, once we look at the commitments of traders data, you're going to see that the numbers for the commercial traders are are oppositely correlated to the trend. So when the commercial traders are mostly on a short position, the majority of their positions are short, you see the market trending up. We're going to take a look at an example, and you're going to see how cool it is that we can see that information. And as traders in the futures market, we need to remember that these commercial traders are going to have that oppositely correlation to the market. We'll look at multiple examples in our presentation. We also have a category of traders that we're going to call non-commercials, not because they're not in the business of making money, just because they're not in the business of the commodity itself. These are large speculators. What they want to do is just profit from the price fluctuations of the futures contracts. They're not really interested in the commodity itself. When a futures trader buys a contract of corn, meaning they have an obligation, they're entering into a contract, it's not because they eventually want to take delivery of that corn. They're not interested in corn. They're not Kellogg's. They're not producing cornflakes. So no way interested in the commodity itself, but they are interested in the price fluctuations. But at any moment, they're going to sell that contract to get out of that obligation. Those are the non-commercials. Those are the speculators, but they are required to report their positions because they are large traders. So in here, we have, money managers, we have hedge funds, they're moving large quantities of money and they are trading the futures markets to do so, but they're only trading futures for profits. And they're meeting that threshold for reporting. They have to report their position size. The third category are speculators. By the way, non-commercials and the speculators are both speculators. So don't think that having speculators here as a third category, this is all the speculators. No, the non-commercials that are speculators and that are required to report because they are trading large quantities of futures contracts. The speculators are non-reportable. They're trading small sizes. So if you're trading futures and you're not a money manager or a hedge fund, you're probably trading quantities that are not reportable. You're not required to report them. So you would fall inside this category of speculators. Now, there's been a lot of conversations and there's a lot of discussions and even books on what group should we pay attention to. I know from talking to futures traders that a lot of people or a lot of traders want to follow the commercials, because they are in the business of the commodity. Although, their intention is not for the futures commodity, they're using it as a hedge more than anything. they have an understanding of the cycles of the commodity and have a lot of experience as to what happens in the commodity world, you know? But a lot of other traders, you know, they want to focus on the non-commercials because these are people that have studied the markets. They know the price fluctuations of commodities. If there's any, you know, seasonality behavior on any of these commodities, they are aware of that. They've studied, you know, the different technical ideas, and these are people that are making decisions on the futures market based on their own understanding, based on their own study, and I'm going to say a more intelligent approach to trading, which is includes, you know, analysis. Um, it includes, you know, the understanding of the trend and so forth. So yeah, I mean, these are professional traders that are putting their money into the futures market, and you would guess that they would know what they're doing, right? So then you have this other group of traders that follow the non-commercials because of that reason. The speculators is a small segment of commitments of traders. Personally, I haven't spoken to any trader that follows speculators. Speculators are most of the time in the wrong side of the market. You know, futures traders eventually are going to lose money. So we're gonna focus on one of these groups in this presentation, and that's going to be the non-commercials. Not because we are in any way recommending that you should, but it's just an interesting approach to looking at commitments of traders data. And I hope that you guys are going to enjoy this. So, but you're going to find a ton of other information that says, no, we should favor the commercials. And there's a lot of different trading strategies and analysis that you can do, you know, following the commercials. Let's take a look. In TradeStation, we have COT. COT, just an acronym for commitments of traders. It collects, TradeStation is going to collect this data from the CFTC. There are 3 indicators that are built into the TradeStation that display COT data. And you're going to find them under these names: COT net position, COT total position, and COT total position percentage. By the way, I have some custom studies that I have modified. I didn't create them. I did some modifications and to fit, you know, some of the presentation topic of today. But I'm going to share this file with you today, and I'm going to share it right here in the chat. It's a zip folder. It's a zip folder containing what we call an ELD. If you've been with TradeStation for a while, you know what an ELD is an easy language document file, and it gives you access to custom studies and custom strategies. That file that is inside of that zip folder contains 2 indicators and 1 strategy. We're going to take a look at them and look at the ideas behind those indicators and the strategies and how they build on top of these 3 indicators that are built in. So if you are a COT trader, if you use commitments of traders in your trading, then take a look at these studies and see if you find some application for them, okay? The indicators can be used on any time frame. We're going to start off on weekly charts, but then we're going to transition over to daily charts once we look at the strategy. And the indicators that are here, that are built into TradeStation, they allow you to include options on futures or not. If you use them by default, they don't include options on futures, but if you want to include those contracts in the numbers, you can just go to the inputs and make a switch, and then you're good to go. You're including options and futures. Let's go back here to TradeStation and talk about what TradeStation offers. I'm going to go here to studies, add studies. We're going to start off with the built-in studies. You can see that the 3 are one after the other. They start with the name COT, and COT, we already said, acronym for commitments of traders. We're going to start off with the total position. I'm going to click OK, and that gives me this study at the bottom of the screen. Let me disable this crosshair for a moment. Settings, preferences. All right, that way it is not distracting. And I'm also going to pull up my drawing tools in case I need to draw something. Okay. Okay, so the commitments of traders, let me make some space right here at the bottom. The commitment of traders is always going to give you numbers for all three trading categories. Here we have three different lines. They have different colors, so it's easy to know which one's which. Although it doesn't label them, let me show you a trick. You can click on the background behind the study, and the data tips window gives you what the lines are. You can see how the blue corresponds to commercial, the magenta corresponds to non-commercial, and the orange line corresponds to speculators. If you want to have a fixed window telling you which one's which, we can go to the data window. So that's in the data menu at the top of the chart, data window, and it's right here. I made the data window font a little bit bigger so that you could see the information inside of it. But notice that it labels, the blue as commercials, the magenta as non-commercials, and the orange as speculators. So what this is telling you, and as we said at the very beginning of the presentation, this is total position. So if you look at, for example, the commercials, they are holding 1,737,022 contracts for corn right now. Well, not right now because this is not real time, but today's Thursday, right? So the report has not been released this week, right? Remember that the report is released on every Friday. So tomorrow evening, we should have the data available. So the numbers that I'm seeing right now is what the numbers that were reported on Tuesday of last week. It's been a while since we have had an update on this study. In fact, let me open up my chart here a little bit. You're going to see how on the current week, which is the very first candle that you see here, or the last candle, depending on how you are approaching the chart. But on this very last candle, there's no line for the commitments of traders because it hasn't been released. So the most updated value is as of the previous candle, and you can see the date. Well, the date of the previous candle is last Friday. If we're gonna switch to a daily chart, you're gonna see how the data gets reflected or updated is on the Wednesday. But I want you guys to understand this because these numbers are not real time. They don't update. In fact, as I said just a moment ago, these numbers are as of Tuesday evening of last week. But you can see how the trading activity is broken down between the commercials and the non-commercials, and then you have a smaller segment which are the speculators. And for most markets, the majority of the trading is going to happen or is going to be handled by these commercials that are hedging their business with these futures contracts. But yeah, this is one of the indicators. And of course, it gives you, the fluctuation of their level of commitment, how many futures contracts there are. But I don't find this indicator as useful as others. For example, I go here to another one. I'm going to go here to add study, and let's look at total position percent. Very similar to the one we have right here at the bottom. I'm just going to put them both on the screen because they're pretty much telling you the same thing, but one is giving you the raw number and the other is giving you a percentage of the total. So if you were to add the three lines, meaning the commercial, the non-commercials, and the speculators, that will give you the total number of open interest for corn. All right, so we have total position on top, total position percentage at the bottom. What I wanted to do is bring up my calculator because what I want to do is add this up. So I want to add 1,737, 022, 677, 847, and 331, 531. I'm not adding. Plus 677, 847, plus 1,737, 022. Okay, there we go. So we have 2,746,400 contracts for corn that are open at the moment. As I said before, this is not only counting the front month, which is the one that has the most volume and the most open interest, but all the different expirations that are available for corn. Okay, I'm getting some questions here on the chat. Does TS show the data on Wednesday before it's reported? No. Remember that the CFTC does not release the report until Friday. So even if we wanted to show the data on Wednesday, it would be very cool to show it before everyone else. The CFTC has not released their report. So it's not until Friday that we get the data and we post it on TradeStation and we backdate it as if it was on Wednesday. Does it work for all contracts? Yes. Based on the calculator, we added up all the total position and it gives us, close to about 2.7 million contracts. What the total position percent does, it breaks down that total amount and tells you what percentage of that amount is held by commercials, what percentage is held by non-commercials, and what percentage is held by speculators. So if you look at the percentage over here, we can see that commercials are holding 63% of the total position or the total open interest. You see the non-commercials are holding 24%, and then you have the speculators holding 12%. Does that make sense? So it's interesting to know, what percentage of that total open interest is being held. Now, these two indicators are cool, but the next one is the one that really tells you what these groups are doing. Because it's okay to know that the commercials have 1.7 million contracts, but out of all those contracts, are they short? Are they long? Because what this indicator is doing is just adding them all together and giving you a total position of contracts. So let's go ahead and take a look at this third indicator, which is the third that's built into TradeStation. That study, I'm going to go here to COT. It's a net position. All right, so here we go. Take a look at the lines here, because now we can see, well, first of all, we see how the lines were inverted, right? Now we can see the magenta line on top. We see the blue line at the bottom, but they all, mean the same thing. And I brought up the data tips window so you can see that we are consistent with the colors. So the blue line is always the commercials, the magenta is always non-commercials, and the orange is always speculators. All right. So that way there's no confusion as to which line is which. But having the data tips window, gives you an indication or a label of which one's which. But here we can see which side of the market are they favoring. For example, the magenta line, the non-commercials, are net long, which is really interesting. Net long. How do we know that? Because that's a positive number. You're going to see that this net position indicator gives you negative numbers if that group of traders is short, and a positive number if that group of traders is net long. And in this case, the non-commercials are net long. The commercials, on the other hand, are net short. So if you were to take, the 1.7 million contracts they're holding, and you were to divide that into, these are my long contracts and these are my short contracts, and you would net those together, netting meaning you take positive and negative and they cancel out, you would wound up with this number. They're net short 451,000 contracts, which is very good information to know, because you want to know what these traders, what is their commitment to the markets. And that's an interesting name for this indicator, commitments of traders, because how committed are they to being long or being short? And you can see that relationship here. I'm gonna open up a parentheses and remind everyone that the commercial values are oppositely related to the market activity. So whenever you see a large short position on the commercials, that's a bullish signal. It's a bullish signal. And when we look at the market itself, let me bring in the data here a little bit. And I'm going to remove the total position because I'm not going to need it anymore. I don't think I will. I will bring it back if I do. But I wanted to do that so that you can take a look at the fluctuations of the net position and how it relates to market activity. Take a look at in this uptrend on a weekly chart. This is the weekly chart of corn. Corn was, it went to a low here of about $200. Now it's 791. So in this uptrend, take a look at what's going on the commercial side. You see how it's trending down. So it's getting more short and more short. So it has that inverse relationship, opposite relationship. When the commercials are short, it's a bullish indication. And when the non-commercials are long, well, we stick to that, right? It's a bullish signal as well. And that line that's right here in the middle, the orange line, we don't care about that. That's just the speculators. Most of the time they're wrong. I want to look at, the people that are that are doing this as a business and that are, intelligent in the sense of they've studied the markets and they have expertise in, identifying trends and knowing when the market's headed. So yeah, and as I said before, you can either follow the commercials or the non-commercials. In this presentation, we're going to highlight the non-commercials a little bit, and you're going to see why. But you're open to also take a look at the commercials and see how you can find some useful information there. Let's go ahead and take a look at, first of all, the custom indicator that I sent you, because this net position it's only good information if you know where it's coming from. And what I'm saying is, okay, we know that the non-commercials have a net position of 501,865. I mean, that's 500,000 contracts net long. Seems like a large number, but if you don't have the starting point, if you don't have what the total size is, you have no way of knowing how big that number is or what's the commitment of that large group. And I'll give you an example. Let's go ahead and set up, I'm going to open up my notepad just to give you a clear example. All right, so I'm going to have group A and group B. And I'm going to say net position. Let's suppose that group A is negative, when I say negative 100, and group B is negative 1,000, right? By looking at the net position, you're probably saying, well, it seems like group B is more short than group A is. But that could be deceiving. The value here could be deceiving because if you don't have information about their total position, you have no way of knowing if that's big or not. For example, if the total position of group A, let's say, for example, that's 1,000 contracts. And for position B, you have 100,000 contracts. Larger group, right? Let's go ahead and take a look at that in percentage. If you have 1,000 contracts in group A and 100 is your net short position, that's only 10% of the total, right? 10% of the total. Now, if you come over here and you look at group B and you see 1,000 of 100,000 contracts is short, that's your net position, that's only 1% of the contracts. Is that true? I think so, right? 100, 1% is 1,000. If my math is incorrect, let me know right here so that I can correct it. So by looking at the net position, it could be interpreted that group B has the bigger short position. But when you look at the total contracts, well, group B is only 1% short. If I look at group A, they have a smaller position. So 10% of group A is short. You know what I'm saying? So even though the net position may be higher, it doesn't mean anything until you know the starting point. So what we're going to do is take a look at these net positions, but in relationship to their starting point. Because, yeah, the non-commercials are net 501, but what does that mean? Well, let me look at the total position first. Let me go here to add studies. Let me go here to, this is one of the built-in indicators, the total position. If I look at the total position of the non-commercials, here it is, total position. Total position 677,000. When we net long and short positions, we still have a long net position of 501,000, which means it's a large percentage of its total position. That's why in the suite of studies that I shared with everyone here, there is an indicator that calculates this relationship between what is the net position and their starting point. So I'm going to go here to studies, add study. We titled these at ART for art, TS TradeStation. So make sure that you go to the @ sign ARTTS. And the one that I'm going to show you is, I think this is the one that I shared with everyone. It's called non-commercial net position percent of total. And I think it's in here. It's just it just went to a separate subgraph. So let me go here to studies, edit studies, customize, scaling. I'm going to go to subgraph 5. Okay, so that magenta line that you see at the bottom, it's only representative of the non-commercials. I used the same color so you can make the connection, but you can see right here that it has a value of 74. What does that mean? That's a percentage. It means that out of all the contracts that the non-commercials are holding, out of all the 677,847 contracts, 74% are long. So it does give you how committed they are in that long position. And you can see historical values, on the positive side and the negative side on how committed they are. So it's an interesting way of looking at the net position as a percentage of the total position. So something to think about. In addition to this study, we also want to take a look at the trend of any net positions, because when you look at the net position of the non-commercials, again, let's go back to this number, the net position. Let me take out the total positions. Sometimes when I have way too many lines, it just gets confusing. But here's the total position. When you see the net position, when you see the net position of 501,000 contracts, yeah, that's good, and that's good and dandy, right? But what if that number continues to drop? So from 500,000, it goes to 450,000. It drops to 400,000, then 350,000. I mean, we're still net long, but does that tell you that the market is bullish? If the non-commercials are reducing their net position from long to less long, let's call it less long, I mean, that's more like a bearish signal more than anything. So not only are you looking at, okay, if they're positive, that's bullish. No, it doesn't work that way, because the numbers may be dropping. And if the numbers are dropping, that means that in totality, the non-commercials are entering new short trades that are bringing down this long net. So not only we want to take a look at the value itself, we also want to take a look at the direction in which the net is moving. There's an indicator that I supplied also right there in the custom ELD. I'm going to go here to studies and add study. It's called ART-TS non-commercial net change. Very cool indicator. I made a few modifications to the original one, so I did not create the original one. Let me put it down here. Because what this indicator is telling you is the change from one period to the next, which is important, you know. So it looks at the difference between 1 week and another. It figures out, how many more contracts or how many less contracts it's moving, and that difference it creates, this net change. What does that translate as a net change? Is it increasing by a certain percentage or decreasing by a certain percentage? The indicator is just plotting you the percent change from 1 week to the next. And you can see that whenever you see these green spikes, is because there's been a big drop or a big increase in the value of the net change. Let me take out this middle one. That was just an indicator that I wanted to give you guys. But if you look at, for example, what was happening right here, those big jumps of net position to a higher value and a higher value are reflected by these green spikes. And it tells you specifically what percentage was that from 1 week to the other. So I know it's hard to see, but you can see it's right there in the data tips window. It's called the net change NC. And you can see that on this bar, it was 10%, 9%, 14%, and so forth. And what the indicator is doing is also color coding based on a user-defined threshold. So what I did is that anything that is higher than 5%, and it's also identified with that dotted line, is going to be painted in green. And anything below -5% is going to be painted in red. So it does give you the magnitude of the change in the net value. Okay, so some indicators that allow you to visualize this data a little bit different. If you are already used to using the default studies that come in TradeStation, that's fine. This is just different visualizations of the same data. It's using the same data and just presenting it a little bit different. Let's go ahead and talk about a strategy and how you can use, commitments of traders. Just an idea. I said before, if you already have a methodology, maybe that's exactly what you need to stick with. We don't do this in any way as a form of a recommendation, but it's a way of triggering your interest and maybe starting or get you to start thinking about, commitments of traders in a different way. Let's go ahead and take a look at my PowerPoint. Commitments of traders application. It can be used as directional guidance or a filter to time entries and exits. When it says here to filter time entries and exits, that's how we're going to be using it, okay? And I'm going to show you a few examples and some interesting aspects of a strategy using COT data. It helps identify the trend by knowing what big traders are doing. Bullish, non-commercial traders are long or increasing their long position. And just remember that a negative commercial net position is considered bullish. On a bearish side, non-commercial traders are short or increasing their short position. So remember that if you have a positive net position for non-commercials that is dropping, that's bearish because it means that they're increasing their short position. And on the other side, if you're looking at commercials, a positive commercial net position is considered bearish. We look at the slope of the net position. That's what we're going to be looking at to look at the signals and if we can use it as a way of filtering trades. And the inflection points or flips can signal tops or bottoms. I didn't point any inflection points, but if we go back here to the chart, if you look at this area where the commercials were positive and now they're negative, and the non-commercials were negative and now they're positive, there's a flip on the graph. You can see that sometimes that correlates with big turning points in the market. Notice how interesting that was, the point, or at least, a few weeks later, we see that big increase in price for corn. So take a look at these inflection points when there's a flip between, non-commercials and commercials. Let me go here and show you the strategy because I know that I'm running out of time. and I wanted to make sure that you guys take a look at this. The strategy is also part of that ELD, and the strategy is based on a moving average crossover. Very simple because I didn't want to complicate things. This chart on the left has the built-in strategy. I'm going to go here to studies and edit strategy. So you see it has the moving average cross LE and the moving average cross SE set to a 30-bar average, meaning that these are daily charts, by the way. So whenever the market activity crosses that moving average, it generates a trade. Does that make sense? Very simple strategy. And if we look at this, the chart itself, let me pull it up. Let me pull it in a little bit. So you can see that market activity crosses to the upside. We see a long trade. The long trade is held until we have a cross to the bottom side. So very simple strategy. If we look at the strategy performance report on this particular one, we can see that the strategy is not doing very well. It's kind of a break-even strategy, 1.03 profit factor. So for every dollar we lose, we make $1.03. Not good strategy. It has 133 trades. This is a daily back test going back 5 years of data. We have 19% profitability. I'm not gonna go a lot into the details about the strategy, but I want to explain what I did with the strategy and how we modified it. Because here on this other side, I have the strategy using COT data. Now, how is it using it? Let me go into the easy language because I want to show you the insides of this strategy. Well, first of all, it establishes a bullish mode. That's only when the close is above the moving average, very similar to the strategy that we're using. And bearish is when the close is below the moving average. So what is the filter? How are we bringing in COT data? Right here. Net position turning up, net position turning down. We're going to be looking at if the net position is going up or coming down. So if you're about to put in a long trade, look at what the net position of the non-commercials is. Are the non-commercials also increasing their position? Because if it is, then we are confirming the trend. So this is when it's turning up, we're looking at the value on the most recent week, making sure that it's greater than the previous week, and the value of the previous week, we want to make sure that it's greater than 2 weeks ago. So we're wanting to see the net position to increase to at least 2 times. That is what we're using this net position turn up as a filter. So we want not only the moving average to be bullish, but we want the net position to be turning up. So that's what we did in the strategy. And if you look at the report, it turns profitable. I'm not saying that this is something that you should trade right away. This is not a complete strategy. Let me warn everyone about this. There's no risk management. This is just filtering out trades based on what the non-commercials are doing in their net positions. But you can see how the number of trades was significantly reduced. I believe we had about 120 or 130 before. Now we only have 31 trades. You see the profitability increase. It was 19 before, now it's about 48, which is in line with trading strategies. One thing that did happen though, if you look over here, you miss out on sometimes those big price swings. So when we looked at the strategy over here, you see how it entered here and exited here, a very profitable trade. We don't have that here. We have more like little snippets of trades. We enter and then we exit. By the way, the exit is all based on a turning on the commitments of traders net position for the non-commercials. So if you're in a long trade and all of a sudden their net position keeps on or drops, then we're going to get out. So that's why it got out before the trend finished, but it got in again, it got out, it got in again, and then it got out. So you see multiple, separate trades. It is trading differently, but it is using commitments of traders to, filter those trades. We have, this is corn, by the way. Let me go back here to the strategy without commitments of traders. Let's take a look at lean hogs. So lean hogs, take a look at a moving average strategy without COT data. We have a losing strategy. We introduce COT data, making sure that the net position of non-commercials is in the same direction. I click this, and now you can see that we have far less trades. The strategy is profitable, and we can start drilling down and looking at the strategy and finding out why. So this is just a couple of examples. Of course, this does not always work. For example, if you guys can tell me a commodity that you would like to see these on, let me know right here in the chat and I'll pull it up, because I'm pretty sure that if you suggest a commodity, it's probably not going to work, because I hand selected a few commodities here that are kind of good examples. Let's go here to gold. Yeah, gold is a good example. I don't have it here. So let's go here to the regular moving average. I'm going to use a custom futures. Okay, so gold, you can see that the moving average strategy on the daily chart going back 5 years, we have a loss of $76,000. If I click on the strategy using COT data, I'm not saying that it's bad, it's less bad than what we had before, but it's not a good strategy. I'm not saying that any of these are good strategies in any way, because they still need a lot of work. They again, my exit rules here on the COT, they're just based on what's happening to the net position. There's no real-time exits, because remember that the COT data is a lagging indicator, and we need to be always aware that we don't want the COT data to be the main basis of our signals. So silver on a moving average strategy for the past 5 years, we have a net profit here with 122 trades. RENA is telling us it's a negative RENA. But when I switch over to the strategy that's using COT data, say RENA, it's less negative, but we can see a little bit better performance. Actually, this is a very interesting example. If you look at net profit, you know, the strategy without COT data made more money, made about $25,000. But the profit factor was 1.16, and our percent profitability was 25. But take a look at the net profit, 25,000. If I go to the strategy that's using COT, it drops the net profit by half. But take a look at, I mean, the profit factor is still the same. I have less trades, but the percent profitability increases. So there's a lot of different factors that we can look at, you know, to continue developing a strategy, or at least a trading methodology that looks at, you know, COT data. We're not, you know, using these tools to imply that you should go this route, but just that they're there for you to take a look at COT data and see if it's something that you would want to implement on your trading. So LB is the symbol for lumber. Let's see, at LB equal 11. Okay, so this is lumber. Again, the symbol that I'm using, the equal 11 INN, gives me the continuous data without any back adjustments. So I like to always use those custom futures when I'm using backtest, because there's no back adjustment to the prices. So in a simple moving average strategy, the strategy does very well on lumber. You can see that we have a net profit of $121,000, 76 trades, 30% profitability. If we go with COT data, you can see that it's not as much net profit, but it did increase our profit factor went down too. The only value that actually made it better was the percent profitability. Let's look at RENA index. RENA with COT data is 1139. Without COT is 15. So it seems like for lumber, we got better results without COT. So yes, again, this is something that you have to experiment and you have to test. The conditions that I have with COT are 2 consecutive turning ups or 2 consecutive turning down? What if you needed another one? What if you needed one less? So there's a lot of different variations to this strategy, starting with the period for the moving average. I'm just using a 30 period moving average. So there's a lot of different concepts or a lot of different ideas that you can introduce in this topic just to make it your own. All right, great. This is all the information that I had for you guys. I hope that everyone got the custom studies and the strategy that you can test. If you didn't, please email me. My email is jnava@tradestation.com. Let me switch over to my PowerPoint because I want to highlight the promotion that is going on right now. 50% off futures brokerage fees forever. Something that I would encourage you to discuss with your account representative for details. Again, another view at our disclosures to make sure that you guys are aware that all the numbers that we looked at are theoretical and hypothetical and are not guarantees of TradeStation. So again, my name is Jesus Nava, Director of Client Training of Education right here at TradeStation Securities. And thank you for spending this time with me. I hope to see you in a future event. Goodbye, everyone.